This is Nabila Rahman, and welcome to the Tech.
Hi,
And
thanks for having me.
thank you. So, basically, today we're very excited to launch our webinar of the Tech episode. And the topic for today is tech startups and funding opportunities, and how do startups use funding, how they basically apply for funding from the VCs, etc. We know startup raise funds for various reasons, but most often the main purpose is to grow their business, to expand. It can take a while for a company to reach profitability, and until then, the business needs some cash to keep going. Venture capital firms that back startups in Southeast Asia and India are raising record sums for new funds as investors shift from China. Southeast Asia and India focused VC funds have raised about $3.11 billion so far in 2022. Last year itself, they raised about 3.5 billion. Today, we will be talking directly to a private equity partner, which is a venture capital investing in different stage of tech startups and operating in different sectors in the tech industry and primarily based in Singapore and Southeast Asia. We will be learning about what VCs are looking for prior to investing in tech startups, etc., and how Bangladesh tech startups can play a role. So without further ado, again, I'm giving the mic to Sam, my co-host, who's a tech entrepreneur living in Bangladesh and will be co-hosting with me this webinar since the very beginning. So Sam, on to you.
Thanks so much, Nabila. It's the Tech, episode 11. Really excited. Please like, comment, and share on these videos. We got a lot of feedback from our last one. In fact, a lot of folks asked specifically about how to raise money for their startup. So here we are today. I'm very excited to introduce to you our special guest. Our special guest has a considerable amount of experience in the VC and fundraising arenas. Is based out of Singapore, and I would love to introduce you to Shannon Rachel.
Hi.
Shannon, thank you so much for joining us today. Tell us a little bit about yourself and your background and what you're up to these days.
So I'm based in Singapore. I'm part of MDI. So MDI is a Southeast Asia-based investor that's headquartered in Indonesia. And we are anchored by Telkom from Indonesia, which is the largest telco. So we are full life cycle investors. We run an angel group, we have seed stage fund, and we invest all the way to pre-IPO out of the different vehicles. And some of the investments are strategic and they work closely with Telkom, but a lot of our investments are also purely for financial gains. While we are Southeast Asia investors, we have invested a little bit outside. We have done quite a few deals in the US. We have invested into India, of course, a lot outside, but I would say 70% of our portfolio right now is Indonesia. I've been in Southeast Asia VC for about 10 years now. So I've really seen it grown from when it was still super early, I think much like how it is super early in Bangladesh right now to where it is today.
It's fantastic. And so tell us, so you spent 10 years, investing in startups. What are some of the things that you look for specifically when providing funding? I mean, what would be some of the items that you're really kind of honing in on?
So it really depends on which fund we are deploying out of, and I think like something that founders founders who are new to the space don't know is that a lot of VCs have their fund mandate, and you see it as kind of like the rules that they have to play out of for that pot of funds that they have. And so it depends on what an individual VC's fund mandates are, what my mandates are based on what I'm deploying out of. And I think as a startup, you want to get an idea of a flavor of what each VC is investing in. You can look to their existing portfolio companies or their most recent investments, and that would tell you whether you could be a fit or not, but it's still worth the conversation. Even if you don't see anything similar that they've invested in, because it could also mean that it's something that it means they haven't invested into a competitor, and it could be a company that it could fill the gap in that vertical for them. And I would say like a lot of VCs, because it's so early would be generalist and be open to investing to quite a lot of sectors. And we see a lot of great companies, but not all of them would be suitable for VCs. And this is something that comes up a lot, especially at an early stage. It's maybe because they're not going to grow enough. Maybe because the founder doesn't plan to exit at all and run it as a lifestyle business. And ultimately, all VCs are looking to invest and return, more than return their funds. So it must be an investee where they can envision a significant exit. It's the same for us.
Mm-hmm. So what I'm hearing there is that the team is really important, that it's not really a lifestyle business, that there might be a potential exit for you. Is there anything else that you look for specifically? I mean, is there something that's more important than the other?
It depends on the stages, and you have to see if we're investing at, say, a seed stage, then it's going to be a lot it's going to be very founder weighted, because you're really investing in people at such an early stage, because there are going to be some pivots. They're not going to get everything right. They're still trying to find a product market fit. And then as you go to a later stage, then you want to see that product market fit already, especially by a Series A, B type of investment. And then you will always be kind of thinking about the exit, but then I think the exit becomes a little bit more important the later stage you go. And so something we like to say is product, people, exit. All of them are important, but there's different importance depending on when you're coming in.
Interesting. Now, if we kind of flip it around, and start putting put ourselves in the startup founder or the company hat, what would founders, what should they be asking you, and what is the best way for them to be able to pitch, VCs in South Asia, and what are some of the key things that they should be focused on that is more compelling for you as a VC?
Okay. So I think as a founder, you first have to ask yourself what you need help with. You need to understand what your company needs. Is it just capital? Do you need help with hiring? Do you need help with networks or future fundraising? And then based off of that, have a discussion to get a sense of whether the VC that you're talking to is a suitable partner. Maybe one of the members of the VC founded a company in your space previously. The people in different funds all have different backgrounds. So it's not just about a fund's track record or how many great deals they have done. It doesn't mean you're going to be a great deal just because they invested in you. You want to see whether the people inside can be able to help you. But there are also some startups we've met who don't want a VC's help at all. So it really depends on what you need. There's someone in particular.
Do most VCs offer, I mean, there's the capital aspect, right? Do most VCs that you're aware of, not only offer the capital, the network, but other auxiliary services to kind of help their portfolio companies?
People are increasingly doing that, building out operations team over here. The one that I think is the most helpful usually is they have HR teams. I think for a startup, it's often very difficult to convince some very senior level hires, especially as you progress from the seed stage, to join your startup. And I think having your VC step in to help with that adds some legitimacy and brings more comfort to these senior people joining the organization. But even when it's not the senior level, it can be difficult to find talent at the managerial level. And I think it is something that takes up a lot of resource on the startup side. So when speaking to my portfolio companies, that's often something they need help with. Some other VCs have also built out marketing teams, growth hacking teams for their startups. Not all startups will find that helpful. Some of them might find it helpful. So like I said, it depends on what you need. Something else that a lot of startups also find helpful is with their future fundraisers. And I think this is something where, you should definitely ask your VCs for help. You're both very aligned in wanting to raise the next round at, a nice valuation, bring in new investors. So bring them in and have them help you with how to structure your pitch. Some of them are so hands-on, they even make the pitch for you, helping you to invest, to introduce you to new investors. So yeah, those are some ways that VCs can help.
So it seems like more like it's a strategic partnership, not only just capital, but also intellectual property and strategizing and creating the marketing portfolio and guiding the startups who may be newbies in the new field that the VCs are playing also. So it's like a
Yes,
more
yeah,
holistic partnership that is being happening.
Yes. So, your investors can be great to bounce ideas off, and they can give guidance, especially early on, because they've seen so many companies in the space. So they kind of know what all the competition and what comparables are out there. But, as a founder, ultimately, you're the one running the company and you know the nuances. Like every company in the same space is going to be a little bit different. And so you should be the one driving it. But of course, your investors, like use your investors, but they're not the ones running the company for you.
That's great. And also currently with the the recession, with the war, what is the funding landscape for Southeast Asia at this moment? Are you guys still investing in startups and with the seed money? And what can Bangladesh learn?
So people are calling it a bear, but I think we are seeing still more and more interest and capital here. In the last year, I think something like 4 or 5 funds announced final closes of like 500 million or maybe even more. So those funds obviously have to deploy. So the money is there, but they have a few years to do so. And so I think we are starting to see investors being a little bit more cautious because of an extension of exit timelines. And what this means for startups here, and I'm sure in Bangladesh also, is that you're not going to be able to raise as quickly as before, where we used to have like not even a year between funding rounds. That's going to be rarer. So all startups will have to ensure that they have sufficient runway for longer than before. And so it means growing more sustainably than going for these quick land grabs. And I think that's not necessarily a bad thing, to think more about your product and market fit than just be in customer acquisition mode.
And this is what is the factors? I mean, is it because of the dollar rate fluctuation? Is it because of the global economic crisis with the war? And is it because it's taking longer for exit? What are the key reasons for this delay or lag?
So I wouldn't say it's so much of FX. I think that would be more of affect like the VC's ability to raise from their investors and LPs, but a lot of them have already raised that and they have a kitty. I think it's more also about the climate, whether the companies, the startups will be able to scale as efficiently and quickly as before. It's also just the exit timeline. As I said before, if before you thought that you would be able to exit the company because there are good exit options, like quite a lot of companies were doing IPOs and SPACs, there were a lot of acquisitions happening. So when you have that, then you would have a bit more urgency to deploy. Also, it's not just your money on money, but how much you return in absolute, but also your IRR. So when your exit timeline is extended, then obviously that is going to drop. So then you would be a bit more cautious about deploying.
Okay, good to know.
And so what sectors are you guys focused on right now? And are there any specific sectors that VCs are really investing in, from, maybe ed tech or, AI, crypto, blockchain, Web 3.0? What are some of the themes that you're seeing more recently?
Yeah, I actually would say that right now, and I'm not sure if it's just me, but half the startups I'm seeing right now are from crypto, probably also because I'm based in Singapore. And yeah, so there's AI for sure. It's always been a buzzword for the last couple of years, but I think it's become a lot more serious in the last 1 year. EdTech has also become quite interesting with COVID getting so many people comfortable with distance and virtual learning over an extended period. So I'd say before COVID, I didn't really think that EdTech, I thought there would still be a couple of years before people were ready for learning online. And so then I thought okay, maybe we have to wait a couple of years before EdTech, but I think COVID has accelerated that because there's quite a big habit and mindset shift. And it's across all stages, right? Say it's not just for K-12s. It's also, say, people doing MBAs. You see people getting a Wharton MBA, mostly with virtual classes, and people are still paying for that. So yeah, that was a shift. Healthcare, for sure, in developed markets, that's something that's always been significant. It can also be helpful in developing markets, but I think you see actually most of the spend coming from the developed markets. There's also been, actually in the last 1 year, a lot of renewed interest in climate and sustainability. And I think that's part of the reason that we see a lot of impact funds coming up.
So if I'm a startup, right, and I've got a great idea, I've got some traction, what are the steps that I would take to try to find you, and pitch you? And by the way, how many startups do you talk to on a monthly, quarterly basis? A lot. I mean, are you constantly just getting pitched from startups? And what does that kind of process look like?
Depends on the time of the year. I would say during it was Lunar New Year and Christmas before, so it's a little bit more quiet. So I would say I just met 10 companies in a month, but in some months I can meet more than 50 companies. So it really depends. Typically also when people start to be running out of cash, you see, which tends to happen around the same time, then you start to see a little bit more deal flow. To find, actually it's not that difficult to find a list of VCs. There are so many resources online, at least for Southeast Asia, where people have collated the VCs, not just by their stages, but even their check sizes. So that's easily available. The emails of a lot of VCs, not too difficult to find. So I do get a lot of cold emails in. I have a lot of people reaching out on LinkedIn. I also have a lot of both warm and cold referrals. So I don't think it's that difficult to reach out to a VC.
Yeah,
And we will pretty much speak to everyone at least once. And I think for founders also, I think you probably want to reach out to as many as you can and speak to all of them at least once, if it is your first time fundraising, because it is in your best interest to let people know you're around, even if they're not investing, and also to shop around and get a couple of term sheets.
Right. And is it important, you think, to, keep those VCs kind of updated on progress of the company and, so that you kind of know what's going on and to build more of a relationship? I mean, would you say that, when you get really excited about a potential portfolio company, and they've kind of checked all the boxes, right? What gets you to actually write that check? And how do companies value themselves? Like, what does that entire process look like? It's like, okay, I think we might have a fit. How does that kind of ball move down the court?
Yeah, so if you've spoken to someone at an earlier stage and they decline to invest, but you still like them as investors, then of course keep them updated on salient developments. Obviously, you don't give an update on every single thing. I had a founder who was pinging me 2-3 times a week on very small updates. Don't do that. I still read it. After a while I stopped responding. I still read it, but I stopped responding because it was getting a little bit much. But yeah, I read all these updates that come in, and sometimes things get more and more interesting when they ping me again to say, hey, we're raising again. It's like, yes, I've been following your updates. It seems interesting, and let's have another chat. So it's not something that's harmful if done properly. And what was and
the
how do you
valuation
evaluate?
part.
Yeah, the
How do you
valuation.
evaluate?
Yeah, so it really depends on the stage. At, say, a seed stage, I think it's really more, like they say, it's more of an art than a science, because it's a negotiation. Very realistically, we see a lot of seed stage companies raising at, say, the couple of $1 million, $3-4 million, but they have no customers, revenue, or product. So it's obviously something that cannot be sold at that point to anyone, to any acquirer, for a couple of million, but that's the valuation they're getting. So seed stage is a negotiation. Even at later stage, it's still a negotiation, but something that's a little bit more concrete, because then you have revenues, you have margins, you have customers that we can talk to. the cleanest way that most VCs would be evaluating something would be based on transaction comps. So they would look at whatever exits, it could be acquisitions or whatever, apply a simple revenue multiple off of that. Of course, it depends on your margins also, and then derive a valuation. Sometimes you might not have revenue, so it depends on the type of startup. I saw where they were using DCF for a hardware startup. So it really, really depends.
Yeah. Also, startups here. I mean, I want to know personally also for how you can get third-party companies to do your valuation, right?
Yeah, we never use third-party companies. It's
Yeah, but if I were a startup and I wanted to know how much I'm worth, let's say it's like I'm like maybe I've been 1 year in operation, 2 years in operation. I have a product, I have a solution, I have a few customers. I need to grow more. It's working. So how do I evaluate myself if I was a startup?
If you want to use someone's third party, I guess if you're very significant IP, maybe we do audits for all our portfolio companies. I would say that typically the auditors would say that everything is overvalued based on whatever comps they are using. So a startup can use an external evaluate a company third party to value them. I'm not sure the price is necessarily going to be better than what they get from a VC. I think it's and it really boils down to like for what purpose? Why do you want to do that? If it's for a funding round, I think it's not that necessary.
Sure. Just to get a better understanding, so have better negotiating power with the VCs, getting a third party. I mean, for all those reasons, basically.
Yeah, so even if you, it's a negotiation, right? So if a company outside tells you you're worth $5 million, the VC is willing to give you a valuation of like 15. You're not going to say like, but this valuing company values me at 5 million because it's lower than what they're going to give you. And private transaction comps actually tend to be higher, and a lot of the third party valuers tend to use public comps.
Mm-hmm. So you're saying that going for VCs for valuation is a far better place to be than getting a third party because the VCs will evaluate your company in a higher spectrum than the third party auditors?
Yes and no, because valuation comes. There's so much nuance that can be inside the deal. There are different classes of shares that come with different types of rights. So sure, like they might give you a higher valuation, but they have preference shares that might have some kind of liquidity preference, whatever inside. So you shouldn't be so obsessed with the valuation alone. A lot of the huge valuations you see of unicorns, they're not ordinary shares. So that I think as a founder, you need to put in a little bit of time to understand what you're giving away. Don't just see the valuation number, look at the other terms and rights that you're giving away also.
Mm-hmm.
Okay, good to know.
Interesting. Yeah. Are you following any tech companies in Bangladesh? And what do you think of the market here?
And honestly, we haven't spent that much, I have to be upfront, we haven't spent that much time looking at Bangladesh. I know Gojek invested in Pathao because Gojek's from Southeast Asia, but I also read a news report that they wrote it off, and I don't know if that's true or not. But these things happen because things are so nascent, and I think it doesn't make Bangladesh less interesting. While funding has probably dropped off because of COVID, and it's very hard for investors to fly down, I think ultimately the country has a population of 170 million people, right? Yeah. So that's always going to make it an interesting market from the size alone.
Yeah, it's interesting. The Tao, and I mean, there's many Bangladeshi startups that have raised, in some cases, very significant money from outsiders. But I agree with you. I think it is still a very nascent ecosystem. I think there's a lot of growth opportunities. It's exciting, I think. Right, Nabila?
Yeah, absolutely. But I think it's going to catch up. Like we've seen the big ones have already, Pathao has been a success story. I mean, It's changed. I mean, it's basically taken Uber off the market.
Yeah.
So you will see the local doing better than the global just because they have the market knowledge of what works locally.
Yep, for sure.
For sure, yeah. Because Pathao is more popular than Uber. Uber is there, but not like Pathao. Pathao has taken the food chain, the motorbike, because it's crazy traffic, and they started with motorbike and then they came to the car. So absolutely, I think, and also our population is so young and educated. I think there's huge promise for that. It's like, 70% is under the age of 35, which is amazing. 75% of the population.
Mhm.
So there's huge significant growth that's going to come out of it. And I think it's an exciting time to be here where we can basically do a lot. So how do we basically set up an investment climate in Bangladesh? What can we do?
Yeah, like you say, the local knowledge is very important. Even in Indonesia, the winners we see don't necessarily have the best tech because you don't have to have the best tech in an emerging market. It's more about how you're going to roll out and execute. That is why, at least for us, we always try to invest into local founders.
Local founders. So if you're seeing 50 companies on some months, right?
Mhm.
How do you choose? Like, what I want to kind of get down into the granularity. So the team is really important, right? Product market fit, that they've actually have some traction. But what actually convinces you, Shannon, to put your money down and write that final check? I mean, what really is kind of the key differentiator?
The founders. So, numbers obviously are also very important because it gives you an insight onto how they are running the company. So it is a data point, but a lot of times I ask the founders a lot of questions and it really depends on the company. Like it's just, you have an active conversation, you ask them a lot of questions, you pressure test, and you see whether they're able to answer all these questions. You see whether they've thought about all the scenarios that you bring up. And you can see, like, there's some founders you talk to it for every single scenario you come up with, they're able to answer you immediately because they've thought about it. And then if the founder keeps like, I have to get back to you on that, on numbers that I think are things that should be top of mind when you're running a company, then I'm just like, so it doesn't mean I won't invest, but there is one potential red flag. So it's little things. I think it's also a bit of an art when you're talking to someone to try and pull these things out and see whether this is someone you have confidence in to run a company, because ultimately you have to be quite agile. Like there was one founder we invested into that quite a few people passed on. But I thought he was very creative in finding new verticals that they could look into. He was, it's just that creativity with say like they had quite a bit of fruits and they had leftover fruits and they're like, what are we going to do with it? And then they were thinking about opening, say, a small ice cream factory and doing private label for that because they are running a marketplace. It's really about the founders and trusting that this founder that you've picked is going to help you to build a very, very good company. And you have to ensure that the founders have incentives to stay. We see situations where the founders get diluted down to something like 3%, and you're like, I'm not sure this guy, he's brilliant, but I'm not sure he's going to stay. So you need to ensure they have significant skin in the game also.
Yeah, no, that makes sense, and I love the pressure test, right? I always call them snappy answers, right? That kind of snappy answers to the questions that come up. That's great feedback, Shannon. Nabila?
Yeah, I think it's great. I think if you don't have any other questions, we can end it. We don't want to take too much of your time.
No worries at all.
Brilliant. Thank you so much.